Hi, my name is Olivia Hipley, and today I will be presenting on the Ohio IT 4738, the Electing Pass-Through Entity Income Tax Return. So before I get started, I want to go over what is the SALT deduction cap. The SALT tax deduction allows taxpayers who itemize to deduct certain state and local taxes to reduce their federally taxable income. This deduction is capped at $10,000. SALT is an acronym for state and local taxes. So why is there a cap on the SALT deduction? The limit on the SALT deduction comes from the 2017 passage of the Tax Cuts and Jobs Act under President Donald Trump. The cap is set to expire at the end of 2025. Nonetheless, the SALT deduction has been a live political debate ever since the limit took effect, and it tends to come up whenever Congress begins debating tax policy. On one hand, the cap increases federal revenue by limiting deductions while mostly sparing the lowest income taxpayers. After all, you have to both itemize and have more than $10,000 paid in state and local taxes to have the limit affect you. With Ohio's new pass-through entity tax election, pass-through entity owners can avoid the SALT cap by taking this deduction at the entity level. The idea behind the IT 4738 is not new. Previously in Ohio, entities have taken composite taxes at the entity level using the IT 4708 and passed through that credit to the shareholders so they could also claim that credit on their Ohio taxes. Now they need only to file the IT 4738. With Ohio's new pass-through entity tax election, pass-through entity owners can avoid the SALT cap by taking this deduction at the entity level. Payments made when filing the IT 4738 are also deductible on the federal return. Now I would like to go over some common questions regarding the IT 4738. What is the difference between the new IT 4738 electing pass-through entity tax versus the pass-through entity withholding tax paid on the IT 1140 and the composite income tax paid on the IT 4708? The new IT 4738 is an entity-level tax that is imposed on the entity's total qualifying taxable income. The tax paid on the IT 4708 and the IT 1140 is filed and paid by the entity, but is filed and paid on behalf of the entity's shareholders or partners or investors. Neither tax, the IT 4708 or the IT 1140, is imposed directly on the entity. While the IT 4738 might be a new form, how taxable income is calculated isn't changing. Pass-through entity tax is a deduction on the entity's actual income, which then gets passed through to the partners or shareholders. Because the deduction is at the entity level instead of an itemized deduction, the shareholders' adjusted gross income is lowered, and then the itemized or standard deductions are considered. This means that at the entity level, you can deduct the taxes without limitation, and that deduction passes out through to the shareholders as reduced taxable income on their Schedule E instead of a limitation tax deduction on their Schedule A. How does an entity elect to be subject to this new electing pass-through entities? The election is made by filing the IT 4738 on or before the filing deadline. A pass-through entity that receives a federal extension from the IRS will automatically receive an extension to the same due date as provided by the IRS, provided that the federal extension due date is beyond the unextended due date for the Ohio return. The pass-through entity or fiduciary must attach a copy of its IRS extension to the IT 4738 return. The tax rate for the 4738 electing pass-through entity is 3%. When are estimated payments due for the IT 4738 tax return? Estimated payments are due for the 4738 on the 15th day of the month after the end of each quarter. Can the entity claim estimated payments on the IT 4738 that were originally remitted for the IT 1140 or the IT 4708 for the taxable year? Yes. The IT 4738 features a line to claim estimated payments the entity made for an IT 1140 or an IT 4708 for the taxable year. As you can see, line 12 on the IT 4738 is where you can claim payments originally made on the IT 1140 or the IT 4708 return. The IT 4738 has a section to report prior year's Section 168 bonus depreciation and excess Section 179 add-backs and deductions. When would this be used on an initial IT 4738 return? Would the add-backs and related deductions from a prior year's IT 4708 or IT 1140 apply to the IT 4738? Yes. The bonus depreciation adjustments for an entity that filed an IT 4708 or an IT 1140 in previous tax years will apply that same entity if it elects to file the IT 4738 in subsequent tax years. Here you can see this is where on the 4738 where you would add back those depreciation. How does an electing pass-through entity calculate the Ohio bonus depreciation add-backs? The depreciation add-back depends on a few different circumstances. First, the electing pass-through entity must compute the amount of federal depreciation subject to the add-back. The amount subject to the add-back is the pass-through entity's total $179 expense less the $25,000 plus all the entity's $168 depreciation expense. This includes depreciation from the pass-through entity's business operations, as well as their proportionate share of depreciation from any other pass-through entity in which the electing pass-through entity is an investor. If the amount of qualifying $179 depreciation expense is greater than $200,000, the $25,000 deduction is reduced dollar for any amount over $200,000 per the IRC as it existed as of December 31st, 2002. Then the amount subject to the add-back is multiplied by one of the following fractions. 6/6 if the pass-through entity had a federal net operating loss resulting from the deduction of $179 in bonus depreciation. 2/3 if the pass-through entity did not incur a net operating loss and it increased its Ohio employer withholding by at least 10% over the previous year, or 5/6 for all electing pass-through entities in all other situations. Can a disregarded entity elect to file the IT 4738? No, a disregarded entity cannot elect to file the IT 4738. Are all owners bound by the entity's election to file the IT 4738? Yes, owners do not have the option to pick and choose between the IT 1140, the IT 4708, or the IT 4738. Can the entity file the IT 1140 and or the IT 4708 for the same taxable year if the entity has already filed the IT 4738? No. Can the entity's owners claim a refundable business credit from the entity's IT 4738 when they file their own IT 1040 individual income tax return? Yes. The pass-through entity form filed by the entity is reported at the top of the investor's or owner's ITK1 in Part 1. The amount of tax withheld or paid by the entity is reported on line 3 in Part 4. The credit from line 3 in Part 4 of the Ohio K1 will appear on line 16 of the shareholder's individual IT 1040 as a refundable credit. They also need to attach the Ohio K1 as supporting documentation. Here's the refundable credit. A pass-through entity may submit payments online, or they may send in a check with this voucher shown on the slide. Can the entity claim a credit carry forward from a prior year IT 1140 or IT 4708 on the IT 4738 electing pass-through entity income tax return? Yes, the IT 4738 features a line on the form to claim a credit carry forward from the prior year. In conclusion, the main reasons a pass-through entity would elect to file the IT 4738 is to receive the largest benefit they can as a result of paying state and local income taxes. Now I would like to go over how payments for the IT 4738 flow from the business to the individual partners or shareholders. So here we can see that this is part of the IT 4738. For the purposes of this presentation, I have just filled out this payment section. So here on line 11, let's argue that they had originally planned to make 4 estimated tax payments of $10,000, and at the beginning of 2021, they thought that they were going to file the IT 4708. So that's why we have this $30,000 here, because the first 3 quarters they were under the impression that they were going to file the 4708. So we have Ohio IT 1140 and IT 4708 estimated payments and prior year overpayment. That doesn't apply here. So that's why we have $30,000 here. And then they decided in the fourth quarter that, hey, we should really take advantage of this IT 4738. And so they made that last $10,000 payment as an estimated payment for the IT 4738. So their total payments are $40,000. And then we can see here on, let's argue that this particular company is an S corporation, that their deduction here for taxes and licenses is $40,000. Now, the company may have had other taxes or licenses to deduct, but for the purposes of this presentation, let's argue that the only taxes they had to deduct were the payments made for the IT 4738. And then here is an example of an Ohio K1 that would be attached to the Ohio IT 4738 for each individual shareholder. And then that $40,000 is going to show up on line 3 here as the direct pass-through entity credit. Ohio tax paid by this entity after non-refundable business credits and refunds. So that $40,000 is going to show up on line 3 here. And then on the individual partners Ohio IT 1040, that's where that amount from line 3 of the Ohio K1 is going to come through. So this $40,000. So any tax liability that they have is going to be netted against this $40,000. Okay, now instead of having a situation that's already filled in, I want to go over one together where we're kind of filling in the numbers as we go, just to really show how it flows from the Ohio return, and then it's deducted on the federal return, and then it appears on the shareholders K1, and then it goes to their IT 1040. So let's make the argument that we have an S corporation who knew from the get-go that they were going to be filing the IT 4738. And let's say that they prepared to make $5,000 every quarter for an estimate. So we can put 5,000 times 4 is 20,000. So we'll put 20,000 here for the IT 4738 estimated payments for the taxable year. And then line 14 is the sum of lines 11, 12, and 13. And so we're going to put $20,000 here because we didn't have anything in line 12, which would have been if we were under the assumption that we were going to be filing the 4708 or the 1140. And that would show up here. And we're not amending the return, so we don't need to worry about line 13. So line 14 shows the sum of all these, which is 20,000. And then that 20,000 is going to be deducted on the federal return, so 20,000 we can put here on line 12 as a deduction for taxes and licenses. And then that $20,000 is also going to appear on line 3 of the Ohio K1. You would have this box here checked for the IT 4738, and all the shareholders' information would be here. Their percent of ownership would be here. And so that $20,000 would appear here on line 3, and then line 3 is going to be taken to line 16 here. Let's act like I didn't type that in. Let's type it in together. So refundable credits, we're going to put $20,000 here, and that is going to offset any Ohio tax liability. And so this is to show that there is just so much benefit to filing this Ohio IT 4738 because you not only get to deduct it on the entity level and lower that taxable income, and then you also get to claim it as a credit on the individual's return, which is really nice also. Alright, now I want to go over how this appears on a partnership return, not just an S Corp. Virtually the same, but it's obviously going to be a different form, so I want to express that. So let's argue that this partnership thought that they were going to be filing the IT 1140, so the first 3 estimated tax payments they made were $1,000 for the first, second, and third quarters, so those total payments were $3,000, and then they decided, like that previous S corporation, like, hey, we need to take advantage of this IT 4738, and so now that they made that last estimated payment as a 4738 estimated payment, so that would appear here on line 11, and then the total Ohio estimated payments for 2023 are $4,000. Total Ohio payments, $4,000 on line 16 here. And then we can move on to our Form 1065. And in line 14, we can go ahead and put in that $4,000 as a deduction for taxes and licenses under the deduction section here. And then on the Ohio K-1, that is going to show up on line 3 here, and then we would also mark the IT 4738 here, and then that $4,000, line 3. And then that $4,000 is going to appear here on line 16 as a refundable credit, so we can put $4,000 here. So whether it's a partnership or an S corporation, it's going to be kind of the same on the Ohio K-1 and then the Ohio IT 1040 for the individual partner. So, yeah. Here are my references for today's presentation. If you have any questions, please feel free to let me know, and thank you so much for listening.